Welcome everybody to ETHOnline Judging Day 2. We've had an amazing month of hacking and learning from people all over the world, 65 countries, 700 hackers, 1K applications. It was our biggest online event yet, and we're really happy with how it came out. We had over 175 projects actually submit, and today we're going to actually be seeing what a few of them made. So just a quick overview of what the format is. As you are all probably aware, it's 4 minutes for the video demo, 4 minutes for questions and clarifications from the judges, and then we'll take a 10-minute break halfway through. We have 12 projects for this session. So right after the 6th one, we will. So what is the criteria for judging today? 5 different areas that the judges are going to be looking into, which is technicality, originality, how useful something is for just regular people, or how simple the project is, UI, UX, how people use it, and then the wow factor, which is the wild card area. If you bring something unique or really unheard of, that's what the wow factor is. So one thing we just want to remind people of is that this is not a competition, though there are prizes involved, obviously, and you can win some money. The majority of people here tend to learn and really get something bigger out of it, take it beyond the hackathon. Not every project is necessarily trying to raise funding or become a business. Many people are here to get feedback and just really dive into the Web3 ecosystem and Ethereum generally. So just keep that in mind. Judges are here specifically for that purpose. And speaking of judges, we want to introduce our 3 wonderful judges that have joined us for this session. First is Patrick McCorry from AnyDot, Imran Khan from Bold Capital, and Arjun Balaji from Paradigm. They're going to be doing the hard work of giving you feedback, really drilling down into what your concept is, and we're very fortunate to have all 3 of them with us today. So we can move right into demos. Now is the time. So the first team up is Yield Curve. So let's get Max promoted and he can start sharing his screen.
Hi, everyone. So in the previous room, when I shared my screen, they told me that they were going to have to play the video for me.
Yes, I can do that. I'm just seeing the note now. I will pull it up right now.
Hi everyone, this is Max with the Ethereum Yield Curve, here to show off our project, which is an abstraction on top of Aave A tokens. So our project allows users access to fixed income investments through zero coupon bonds, which is just a bond that pays out a specific asset at a specific maturity at a rate of 1-to-1. So each ZCB token is equivalent at the maturity date to 1 of the underlying asset. So let's hop into this diagram. So we have a ZCB on ETH that matures on January 1st of 2022. And on the left, we have Alice, the credit trader, and on the right, we have Bob, the fixed income investor. So Alice thinks that the money market rate in Aave will be higher than the current rate at which ZCBs are selling against ETH. So she believes that she can profit if she is to sell ZCBs on the market. So in order to do this, she has to deposit A tokens as collateral into the Ethereum Yield Curve smart contracts. And in return, she has minted ZCBs, which she can sell on the Uniswap. It's important to note that when she deposits collateral, she will continue to generate the yield that is begotten by that collateral up until January 1st of 2022. And then on the right, we have Bob, the fixed income investor. So he just wants to lock in a fixed rate for a fixed period of time. He likes the stability. So he takes his ETH and he goes onto the Uniswap market and he buys ECBs. And he knows that he can take that rate to the bank. He knows that he will be able to exchange his ECBs 1-to-1 for ETH at the maturity.
So let's go and look at what a yield curve looks like. So this is a hypothetical yield curve for ETH. Right now, this product is just on Kovan.
So this is just a projection of what it might look like. But as the market starts to project ETH 2.0 and staking to come online, yields start to pick up. Okay, so let's go through the process of what it would look like to actually sell some bonds. So you've got some AETH, and what we need to do first is wrap it and put it in a form which our other contracts can interact with. So we will get a wrapped AETH ERC20 token back. Let's just wrap 1.0 AETH. And I've just confirmed the transaction on MetaMask, though you won't see it because OBS is only capturing my browser. This will just take a moment. And one of the very important things to keep in mind about this project is this puts DeFi on full display for institutional investors and anyone who's been skeptical. Well, now it's very compelling for them as to get into DeFi, as the yields, plainly put, can be compared right next to the yields of traditional finance. And it's the yields from traditional finance, to say the least, leave something to be desired. And I think this project will hopefully can bring about the next wave of capital inflows into DeFi. All right, so now let's go ahead and let's deposit our wrapped AETH. And let's deposit 1. Okay, so I've just hit confirm. This will just take a moment, and before you know it, we'll have some bonds, and then we're going to go on to Uniswap, and we will sell the bonds and see what that looks like. All right, we've got it. So we got a little more than 1 AETH ZCB, and well, the reason that we've gone over 1 is because Aave tokens generate yield as time goes on. So yeah, okay, sell bonds against your collateral. All right, now we're taking Uniswap. Okay, so I've preloaded these 2 tokens in here, which Uniswap doesn't recognize, but that's okay. So if we want to sell just a bit, let's say we just want to swap 0.01. Well, okay, now we're going to swap. Okay, so yeah, we can see that we have sold 0.01 a ZCB.
Seems like that cut off at the end. Was that the proper ending?
Yeah, I had to fit it in 4 minutes. You
okay.
I just said at the end something about ZCBs. I was just saying we sold 0.01.
Should we ask questions now? I've got one.
Yep. Yeah, it's on to you guys now.
Yeah, maybe there's like me as being a bit ignorant around financial assets, but so zero coupon bonds, they don't normally pay any interest. Normally you just buy something on the cheap, and then over time it gets released, then you get the asset. So how does the yield work here?
Well, yeah, so depending on what you pay for it, you can derive the yield. So let's say you buy a ZCB that matures 1 year away from now at 0.5 of the underlying asset. That would imply a yield of 100% because in 1 year you will be getting double what you've paid to get the ZCB.
Okay, so it's based on the accrued value at the end. So you sort of like just estimate or predict what the yield's going to be.
Yeah, so that it allows the market to have a prediction on what the underlying money market rates will be over time, and it allows traders to arbitrage. So if they think the money market rate is going to be higher, they sell ZCBs or vice versa.
Yep.
What was the hardest part about working on this project?
I think actually the front end was probably the hardest for me. It was actually my first time using React, so that was, yeah, probably the hardest part.
I feel your pain by that. I've had to use React this year.
What interesting extensions do you think Aave could make to the protocol to make constructing products like these easier?
So I think that the main use of Aave right now is we just use it as a money market, and it's really just another money Lego that will allow DeFi to mature. So Aave really just underlies everything that this project does. And without Aave, we wouldn't even be able to function. It's just the basic generating yield function is how that's what we use Aave for. We just use Aave to generate yield without the users really having to think about it.
I have one question, I guess. So obviously the UX still has much to be desired. You know, you've got like a bunch of fields that are populated. You know, going forward, how do you think you can make this more user-friendly for, let's say, finance newbies like myself, where then I'd actually just want to go and participate in this market and get my yield?
Yeah, so definitely UX is something that we're going to have to improve on. There's, you know how I had something where I had to wrap my AETH first? I can get rid of that. I can actually put that in another contract. You'll have less buttons and you won't have as many fields of information popping up once I just get rid of that. So that's just something that I had here for this hackathon because I was kind of rushed for time.
Are there like games or like, I don't know, like diagrams or something you could put on it where it would help me understand the two-sided market a bit better, how they like gauge of what I should buy?
Yeah, I'll look into that for sure.
What are some features that you'd like to add that you didn't have time to add?
So I'd like to add tranching so that if at the maturity for whatever reason something were to break and we weren't able to get our yield back, you could actually kind of tokenize out that risk by putting bonds of different tranches. So that just means that the highest tranche, so the senior tranche would get paid first, and then whatever isn't paid to the senior tranche would go to the middle tranche. And if there's anything left over, that would go to the lowest tranche. So just kind of tokenizing risk. I think that's a big application of this project in the future.
Cool, thanks.
Any final comments? All right. I think we are going to move on to the next project. Thanks for being the first presenter, Max. That was great.
Thanks for sharing, Max.
Thank you.
All right. Next up is Audit Protocol. And I believe Swaroop and Anamit have already joined. So I'll let you guys start.
Hey everyone. Hi, this is Swaroop and my co-founder Anamit. We work at PhoBLock. For ETHOnline, we decided to work on Audit Protocol. The idea behind it is to build a verifiable audit vouching solution for businesses. We're using Ethereum and Filecoin protocols to back the data and the proofs behind it. So just to give you an overview of how it works, as a developer or a business, you simply use our API to submit a payload. We encrypt that document or string and store that on Filecoin. The proof of the document, which is in this case a hash of the resulting document, is also stored on the Ethereum smart contract. So this actually allows us to sort of generate an event, and this can be an entire stream that offers a chronological view of accounting records. Under the hood, we're using a Python backend with Fast API and a few microservices that talk to both protocols. There's a very simple front-end UI that I've built to show this demo, but primarily it'll be used using an API. We use Matic mainnet to store our proofs using BlockVisual's API gateway, and PowerGate, Textile PowerGate to manage our hot and cold storage on both Filecoin and IPFS. All right, let's get to the demo. Okay, so I have a bunch of things running here. So we simply create an account right now for the purpose of the demo. So you get an API key, and that's what you'll be using to talk to the API. Now let's try to submit a payload. So I have an example here, which is just a sample of invoices or like some sort of a transaction list in a CSV. So I'm going to just copy that, take that payload here, and hit submit. So at this point, what happens is we're submitting the job onto Filecoin, right? Our deal watchers are actually watching for the job to be completed, but from a perspective of hashing, we already committed that on to the blockchain, right? So I'm just going to go step by step. So this is the transaction hash of the data that was committed. So what we're doing is we're taking that payload hash, doing a getChack hash on that payload and committing that to this very, very simple smart contract. So you can see here the payload hash that's been generated against the API key hash. So meanwhile, the job should have been completed. Sometimes it gets done faster, like in this case. So you can see the entire process that's happening. So if we actually check here, so it should have gone to stored, right? So I'm also going to show you when it actually fails. So for intentionally, for anything that is a small payload, we are not storing that. And that actually fails through, let's take a look. If you actually come back here, so you'll see that the storage has failed, right? If the company or the developer wants to download their payload, right, so they can actually make a request. So this is what the UI sort of does behind the scenes. So you're going to make a request. So we check here. And if the payload is ready, then we'll be able to download that payload right away if it's been cached. If it's not the case, we will send them an email and they'll be able to request that. They'll be able to either fetch that through the API or through the UI, right? So we can just click here. We can see that the payload exists. Let's actually make sure that this is the hash that was actually committed, right? And as we can see here, that's the getChack hash. And that is what the payload was committed, right? So this is how we can ensure that the timestamp, which you can actually see an event that was generated for this record, this is the timestamp, right? So this is the proof that the audit log was done at a certain point of time. Yeah, so that's our demo.
Awesome. I can ask a question. So you mentioned at the start that there was some encrypting of the document, but it looks like in the example, there's no encryption on the document that you downloaded.
Yeah, so we actually decrypt that for them. So we're using like textile buckets to do it, but the company can also encrypt the payload if they don't want to send us the plain text.
Yeah, I've got like two further questions. I guess one question, one comment. One question is what sort of companies do you foresee wanting to use this? I imagine for some companies there may be some regulatory concern that they're storing encrypted documents on a peer-to-peer network, and I guess decrypted is really bad for them. And then yes, I guess that's the question first.
Yeah. So that was the reason why, I mean, for the demo purpose, I didn't want to play with an encrypted payload. It's hard for people to understand what we are storing. But we mostly see companies wanting to not give us in plain text. And even if they do, they can probably host this on their server as well. So it's open source right now if they want to run it on their end. But it is a challenge since we're dealing with secure data here, since it's literally called the Audit Protocol. It's something that we will have to ensure that they don't store.
Yeah. So this is my comment, and this is a comment that everyone else may have questions.
Thank you. That's great feedback.
Yeah. So it's kind of. I'm sorry to interrupt, but I'm sorry. I'm just another of the teammates of Swaroop. Hi. I just wanted to say the Merkle proofs, right? Like we'll be mostly taking a hash of chunks of these payloads because they're going to get appended like a log event, right? So we do not actually need to keep exchanging the entire plain text data. Most likely it will be bits and pieces of Merkle proofs that will be moving around.
Okay. Yeah, I guess my only comment would be, like, normally with audits, you want to prove something about the information to an external party. So there's a lot of these protocols around like proof of reserves, etc., where you use snarks to prevent like meaningful information about something. Maybe there's something you could look into in the future. So there's an audit going on because you're proving something about revealing it. That'd be my comment. I'll let the others take over.
Yeah, thank you, Patrick.
What are some use cases that you'd like to see companies use out of Audit Protocol? Like as you were envisioning building this product out, what were some of the use cases that you were thinking about as you were building this up?
Yeah, so we've been talking to companies, even in, especially we've been in the blockchain space for like 3 years. So this came out of an idea because we've been providing APIs for a long time to non-blockchain companies. How do they use blockchain, right? So when you look at the traditional sense, like they use a lot of third-party tools and middlemen, which they can totally eliminate if they actually want to do this right now, right? So primarily, I think we'll first target financial companies because it makes the most sense. And to begin with, because there's a bit of that blockchain element that, even though we don't try to say that when we give the API out, we want to make sure that they can actually use it, right? So we'll first talk to even centralized exchanges, right? They're trying to store a lot of data right now, and then sort of move on to traditional companies who are just storing any kind of financial, non-financial data.
Cool, thank you.
Thanks.
How did you guys decide to use the sort of Matic L2? Like, what was the motivation? How did you? I guess all of the different components of your stack. I'm curious what the motivation is.
Yeah, like I said, we've been building blockchain APIs for about 2-3 years now. So we wrote Ethereum only, and then we launched with Matic earlier this year. So we sort of power their entire infrastructure at the moment. So we have seen their scale and what's possible. And also because the gas costs are so high, if we were to do this live demo on Ethereum mainnet today, that's precisely, I would say, the first number one reason for us to use an L2.
Great. I think that might be time for this project. There's not any final comments.
Thanks so much, everyone.
Good job, guys.
Thanks for presenting.
Thanks.
Next up is Molecule Protocol, and I think we just have Calvin here, so I'll let Calvin start.
Hey, from the green room, I wasn't able to share the video, so
I am playing your video. You are
awesome.
correct.
Thank you, thank
Let me
you.
get that pulled up now. And we will get it started.
Hi, this is Calvin Pack. I'm presenting for Team Maximus. My teammates including Fazon and Andrew Bust, and we are presenting the Molecule Protocol. Right now, the tokens, a token can be transferred between a sender and recipient on a DEX or marketplace without any restrictions. What if we want to validate both sender and the recipient? We look at the security tokens, standard composable token, and ASIC protocols for inspiration, but we want to do something simpler. So what are molecules? Molecules are unique ERC20 and 721 combos. It's very similar to a chemical reaction. Molecule protocol enforces a token combination for both sender and recipient in order to approve a transaction. This is an example of the molecule structure. And let's look at a case study with KYC. Right now, you have two choices. On centralized exchanges, they will take care of your KYC and compliance and install in a centralized database. They control your private key and charges you a lot of fees. On a DEX, you control everything, but it's not compliant. So what if your KYC approval can be stored on chain? Now your wallet is compliant and tied to your identity, and you can still retain full control with your private key and not pay expensive key fees. With Molecule Protocol, compliance can be enforced in all subsequent transactions. So user can participate in DeFi without having any blockchain knowledge by creating a POTUS account, which creates Ethereum wallet address, go through KYC, get approved by Bloom. Now we mint a ERC 721 token representing your KYC. Similarly, for other legal docs for real assets, you can do the same approach. So there are two different ways we can implement this. One is through an extension, adding a new compliant transfer from with the Molecule smart contract address as additional parent. But this will require changes to all existing assets or implementation of the wrapper. So the other way is to inject a check in all DEX and marketplaces, so we can validate. So the process of creating Molecule Protocol is pretty simple. One is to define all the molecule structures. Here's a schema for doing that. And then once you've done that, a validation smart contract, the Molecule smart contract will be generated and deployed. And now when you list your asset for transfer, you will specify the compliance requirements and it will be enforced by the Molecule protocol. So here's a live demo. Let's create two ERC 721 tokens because this is what I defined in the Molecule smart contract. So we are launching two different ERC 721 contracts, and now let's launch a Molecule smart contract, which takes two different ERC 721 tokens smart contract addresses. So we're waiting for the second one to be minted. Now it's done, and then so we can deploy our predefined molecule smart contract. So what it does, because with my current wallet address, I created the ERC721 tokens. So my address already contain the approval, and let me add myself into the whitelist, make sure that I'm being whitelisted. So if I enter my current wallet address and transact, you'll see as a recipient, I should get a recipient total. And the transaction is being minted right now, being mined right now. And see, it's done. And what if we use a non-compliant, the transaction will be rejected. Thank you so much for your time.
Calvin, quick question.
Hey.
As you were building a molecule, what intended use cases were you thinking about as you're kind of thinking about meshing tokens together?
So we guys were really thinking about doing a project on a CDP with MakerDAO, but during the time of hackathon, I think the shockwave sent because of the arrest of the CTO of BitMEX, and then we started talking about like, hey, why can't decentralized exchanges also be compliant? So we started this discussion on it and thinking about, hey, what actually, you know, if you got approved by a KYC, why can't we just mint a token and represent it and associate that with a wallet? So this way, you can actually have compliance easily. And then I tried to do a more generic way, like how can we structure this? So basically, that's how we came up with the molecule idea, because on top of KYC, you may have other regulation requirements, some legal documents in the real world. And just by representing such requirement or approval process by an ERC721 token, you can enable a lot of different combination and real use case. And of course, I think the first thing came to mind is the ERC 1400. That's the polymath attempt at a security token. But I think the implementation is actually way more complicated than what we can understand. So we're trying to do a very simple solution.
Awesome. Can I just clarify the solution a bit? I mean, maybe I missed it there. Sounds like you modify the ERC20 token and then you add a new function that checks if the address is compliant. Is that right? Or is it like a new token in its own right?
So this is one of the original thought we have. Hey, we can just add one function, but then thinking about it, it's going to change all the existing asset. Oh, yeah. So we instead of doing that, I think it's easier to add a function to the DEX. Like we can fork Uniswap, and then just before they approve the transaction, we enter the molecule smart contract address, and then there's a function called just like verify molecule. And if it returns true, then we'll enable the transaction. Otherwise, we reject it. We actually started working on a ERC721 token. It's kind of like an OpenSea implementation, but we didn't get to finish it. So this is a pre-generated molecule smart contract that I did in the demo. Yeah. And yep.
Just to clarify then, so basically in the DAX, there's a compliance function. It calls out to your ERC, I don't know what it is, 721 contract.
Yeah, 721.
Address is whitelisted and is in KYC and they're compliant.
Yeah, the whitelist function could be done in the real time, so you don't have to get pre-approval. But yes, with the marketplace contract, you can actually validate that, you know, at the time of transaction. But you need to do one more thing, which is add the compliance contract when you list the asset for sale.
Cool. I mean, maybe you could change the name from Molecule. I don't know. I don't know if Molecule has anything. It confused me to begin with. That's why. Yeah.
It could be very generic in a way, if you think about it. I'm not good with names, but definitely yes.
Evan, what's the next thing that you would add to avoid kind of the KYC component here being gamified or something?
So So the two things that I plan to do next is number one, to get a signature block. It's very similar to how you sign any agreements on using private key, and I think that's something like a term and condition, which is very commonly used. The second thing I want to do is actually build out a DEX or ERC 721 marketplace contract to showcase how easy it is to integrate the molecule protocol. I think it's way simpler than I thought it would be, but then I didn't have time to, our team didn't have time to finish it.
All right, I think that's it for Q&A. Thank you, Calvin, for presenting.
Right. Thank you
Cool
so much.
Project. Next up is Oracle Sandbox. I'll let you guys start.
Okay, sure. Thank you very much.
Hello, this is Logan King here to talk about our hackathon project, Oracle Sandbox. Oracle Sandbox is a project designed to assess the security of smart contracts and the data feeds that they are getting data from, which are often web APIs or similar. You can see that contracts are kind of hierarchically connected, and we have chosen to visually display them in our app for better intuition to users. We have a grading system that comprises of assessing the data reliability of data sources, which is basically comparing similar data sources to one another and seeing if any of them are outliers. Vulnerability assessment, which if you import your smart contracts into our system, we will tell you if any of the contracts are known vulnerable or may contain bad source code. And then we have a quorum rating, which is basically stating that if you're only getting data from one centralized web API service or entity handling the data, it's hard to trust them, so we recommend getting data from multiple sources. Visually, for our application, we wanted to, as I said before, do kind of a block diagram structure, and this is kind of the reference we were going for, where we have multiple nodes that represent data feeds or APIs in Oracle. And then to represent which data is going to what smart contract, we have kind of Oracle ports that the data flows through. The software we're using to display this currently has a limitation that only one input can go into one input port at a time. So we've kind of compromised with the port diagram. Instead of having one block, we kind of have these port nodes that we've created. And here is our website with our application. So users can come and create components using spawning them from a selection over here. They can create data feeds, they can create Oracle, smart contracts, or ports, which kind of collect multiple data sources together as one output. So for our example, we have 3 data feeds here going into being basically used by this first smart contract all through this first Oracle. And then we have another smart contract importing a library from another smart contract, only taking one data feed. And we have the security grading is working, but we haven't hooked it up to the front end yet. So visually, that's all we have right now, but we do have an update button for fun. So when that's plugged in, the users will get a nice result of how their contracts are secure or insecure. And you can build all of this even without source code, just to kind of play with architecture to see if it is safe or not, or you can import your source code and it will automatically load all this in.
I guess I can start. You said you can upload the source code. I mean, I guess the first point I actually want to ask is, so it looks like it's a GUI for putting together the architecture of your API and then getting like a security rating or comments to say, oh, well, this is bad practice. Just to clarify, that's like the main idea, isn't it? And then you can also upload your source code. And that was going to be my question. If the source code does have to be like a particular format, like how do you go about just reading random source code for identifying this information?
This is Logan King. You guys can hear me, right?
Yep.
Yeah.
Awesome. Right now, the app doesn't have source code importation, but what we would like once it's built is to be able to just provide source code. But mostly what we're analyzing is contract architecture. So what we'd mostly rely on for importing the block diagram is kind of seeing what imports what, such as if a contract's importing another contract, then we can see that that's hierarchically a dependency. If it's using an oracle, and then what data feed APIs are being called from that oracle. And from that, we can get all our block diagram information. We would also like to get additional information from source code to assess vulnerabilities, either whether the source code itself it contains known malpractices, or whether the source code is known to be vulnerable through a hash or something else. But you can use our app without source code to just entirely play with architecture in a theoretical system.
Awesome.
Imran or Arjun, do you have any thoughts or feedback?
So, what was the most fun part of working on the project? Like, I guess as you were forming a group, why this idea, and what led you to build this up?
One of our members is working on a project that they thought could benefit from this application, or kind of being able to assess the security of data feeds. There's many different types of data feeds. You can have web APIs. You can have receive data from sensors in a specific location. Some data feeds must be structured in a certain way for contracts to work, or contracts are expecting a certain format, and APIs might be able to change over time, which we would recommend smart contract owners kind of build in the checks to make sure that you're using the data you expect before you use it. But the most fun part of it for me was probably just meeting the team and learning to use new tools, and programming it also.
Yeah, I can complement that. Also, it was fun to apply a user-centric approach from the beginning, about thinking about who's going to use this tool and how the UX and the UI are going to be. That was also an interesting part, which is one of the results for the project.
Yeah, a major element of it too is just considering that for real world application of actual onboarding of people in the average world. We thought that a lot of the projects are going to be focused on that are going to be necessarily looking to feed off-chain data, and also are necessarily going to be the types of development teams that aren't crypto native, but they're not familiar with the concept of deterministic backends, and so that at least this is a place where they can land and get some initial feedback or general advice on good practices.
Awesome.
And also that Oracle teams could also participate in this and collectively add to that information that first-time development teams are going to be using.
Yeah,
You had something, Patrick? Yeah, go ahead.
I have one small comment. Obviously, there's lots of different oracles that people are using that all have different API setups. One thing that you could do that would add context to this work is maybe a comparison of them all, and they actually highlight the list of vulnerabilities that pop up if you use different solutions, or the good or bad things of each solution. For example, what would be the difference between using Coinbase API and the Chainlink API, at the technical level, not just the fact that there's different, source origins.
Part of what this is a very security focused thing, but it's also just trying to prepare developers and newbies to understanding what they're looking at. So part of what we are doing is automated assessments, and then the other part is when you would click a component such as an Oracle, which we'd hope to have different oracles such as Teller and Chainlink and other services hard-coded in knowledge about. We'd like to give resources on them, a little explanation of how their network works, what users need to know in order to assess the health of that network, if any major vulnerabilities have been detected or happened recently, or if it's been compromised, they should know about all that.
And is this ongoing, or is it just kind of you want developers to use it as they're kind of pushing out their final product?
I'm not entirely sure what you mean by ongoing, but
What I mean by
either...
that, do you offer, is it like more of a kind of like an ongoing monitoring service as well? Or is this just going to be something that developers can kind of fact check to make sure that there's no issues with their data feeds?
Right. It's more of a developer/user fact check. You could either point to contract address or source code. You can do it on the contracts you're developing, but you can also do it on live contracts once they're in use. And that data may update, such as, if an Oracle service or a data feed is detected as compromised recently, then that information will present itself, whereas it might not have presented to developers upon them moving the software to production.
If it became robust enough in the future, it could be a potential, tool where you actually screenshot or grab some sort of text off of it, and you put it on your application as sort of a check mark of security to present to people. So just an additional, thing there that the users who are about to put in some actual capital can, see on the user interface and determine for themselves if they find it to be more secure.
I gotta jump in because we are a couple minutes over before, so I'm going to wrap up there and thank the Oracle team for presenting. So great job, guys.
Thank you very much.
We're gonna move on to the next team here, and that would be PhoBLock. I'll let you guys take it away.
All right. Just a sec. Got to do something. Can you for platform? It's called PhoBLock. Short form for. It is a community-owned for-the-chain decentralized app. Our team is consists of 3 people: me, Rafiq Khalil from Malaysia, Sergey Alcaraz from Spain, Changsu from South Korea. The purpose of us doing this project was to try to understand how to develop decentralized apps, and it's been a steep learning curve for us. We haven't done our project throughout, but we have some stuff that's already been done, and we can show it to you guys. What is PhoBLock? PhoBLock is a community-owned decentralized free sharing photo platform, meaning that in simple terms, it is a decentralized Unsplash. We're hoping that photographers can upload their pictures for non and commercial use for everyone, but in return, they will be rewarded with a token called Pho from our platform, and they can use that token to vote for any new features in the platform, and also they can use that to buy services within the platform as well. We're thinking about making a fully decentralized application by implementing IPFS for the uploaded picture in our platform. But that's going to be our future plans for this platform. So how it works, the communities that we are trying to get engaged with are the photographers, and also for the users that wanted to download pictures for their own personal use or for commercial use. In a way that photographers will upload their pictures in the platform. The users will go through, browse our platform and try to get the pictures that they like. They download that picture. The moment they click download, smart contract will be activated to send 1 token of Pho to the photographer, the owner of that picture. And the photographer can use that token to vote any proposal and also use that to buy services within our platform. So this is the flow diagram on how the token is going to be like, the economy within our platform. That's the logo and also the name of the token, Pho. As you can see here, the moment the download button being clicked, 1 token will go to photographers, and the photographer can use that to buy proposals and services within our platform. So let me show you our design for our front end. This is the homepage of the platform. For photographer who wanted to join this platform, they need to sign up here, and we will ask for their Ethereum wallet here as well, so that it can automatically send the token to their wallet. The moment they already made that, this is the account page for them and the token available for them. The moment they upload, we also offer the services down here so that they can use the token that they already gathered within the platform. Like here, be on top of the search page for this keyword for 15 fold. And they can use that token for this page here to vote for proposal and also to submit proposal. So this thing will be done quarterly. So every photographer can use their token to vote whatever proposal they think would be beneficial for the community. So as a user, what you're gonna do, you're gonna go here and try to see what pictures that you like. The moment you see this picture, if you like this thing, you can click here, download, and then it will give one token for that photographer. And this is the search page, same process for them. Right now we have it already done the front end programming using React and also the back end using Spring Boot. And maybe in a couple months we will have up and live for our platform for everyone to use. For now, this is what we have, and we're hoping to get it done as we are moving forward and learn new tools for our platform. Thank you. That's all from us.
Awesome. I can go first, I guess. I can just jump in. So I think for this is mostly as a comment at the moment. I think for the project, I think you could take a slightly different option being really useful. So for example, a few months ago, we were looking for a logo for a browser extension. We ended up with a Pomeranian with a little black tie, which was really cute. But I just couldn't work out the license around it. I went to several websites and I couldn't find out, who made the image and what was the license for it and how could I pay for the license so we can never use it for production. Where if you use something like this, the photographer can, or the graphic designer can upload their image, detail the rights to the image, and then actually allow me to pay for it and then prove to other people that I have the right to it, just to avoid copyright issues. I feel like if you did something along those lines, I'd find it really useful because that was a pain in the ass for me. So that's the comment, I guess. I don't know if you have any thoughts on it.
Oh, okay.
I guess the question would be, have you thought about how you might work licensing into just a place for photographers to share photos?
So far, we haven't figured that out yet because we're just looking for something to do for this hackathon, try to learn as many tools as possible to try to develop a decentralized application. And another thing is that in answering that question, I would say that we haven't done a lot of research on that, on how to pursue on that direction.
Look at it. I mean, the field. Yeah. Sorry.
Proceed. I'm actually.
I was just going to say that the copyright field for images is a mess. When I was trying to find this copyright, and it's just something that could easily be solved by something like this, where it's just the graphic designer can just pick a license and then sell it on the internet. So I think you could go towards that direction and be really useful versus voting tokens. And I'll open up the floor to other people.
What have you learned throughout this process?
I'd say on how to develop smart contracts, because to me it's really a strange thing trying to figure out what smart contract is, and through this process I see the technical behind on how to develop a smart contract, even though we haven't fully developed one, but I've already seen the fundamentals on why this thing works and why people invest in it. Before this, I don't really understand why people would invest in trying to develop this kind of thing. I know that we understand how the blockchain works, but to develop tokens and smart contracts, it's something alien to me. Now it's pretty much obvious.
How are you thinking about kind of development of the project kind of going forward? I know that you guys have now an interface fully designed.
So we're thinking about just finishing this project, moving forward from here, because technically we had like a technical difficulty before this. We use Flutter to develop our front end, and we try to increase our learning curve by learning that framework, but instead we kind of change our mind along the way in the middle of the hackathon. And that's why we need to reorganize everything and try to finish up, at least have a demoable website to show.
All right, great. Thank you for sharing the project, guys.
Thank you.
Okay, thank you.
Thank you.
All right, so the next project and the last one of the first half is going to be xWin investment. And just after this, we'll take a short 10-minute break to stretch your legs, get some water, whatever you need to do. So I'll let Calvin present.
Hello, hey guys, good morning. Let me share my desk.
Did you share your sound?
I don't hear anything. Yeah.
Oh, sorry.
Okay.
Well, you're on your ear.
Yeah, let me share it again. Sorry about that.
No problem.
I blame YouTube. It's okay.
xWin is a decentralized investment platform that connecting fund managers to investors. How it works. The protocol uses Uniswap for the swapping purpose, Chainlink price fee for the fund valuations, and finally Aave as a lending protocol. The protocol has an interface for fund subscriptions, redemptions, rebalance, create target, direct swap, and liquidity pool. Now, let's go for the demo. Fund manager can create that fund target through the screen here. So for example, the fund that focus on tech focus will be having, say, DAI for 30% and BAT as 70%. Once they look so fine, they will start to create the target. So I need to confirm and sign the transactions in the MetaMask. It's done now, and now we refresh the screen. The xWin tax is enabled to allow investors to do the subscription and redemptions. Now the fund is ready for the subscriptions. Click on the subscribe button and key in the number of ETH that you want to subscribe to the fund. Press invest and MetaMask will be pop up. Click on confirmations and wait for the transactions to be done. Now the transaction is done. Refresh the fund and we will see the number of supply is increased. Next, we will go for the redemptions. In redemptions, click on the fund that you want to redeem and key in the number of units that you want to redeem from the fund. And checkbox will give you the choice whether you want to return in ETH or in underlying token. Click approve and sign the transactions in your MetaMask. And once it's done, continue with the redeem. xWin provide the rebalance functions for the fund managers to manage the fund. Basically, to rebalance the fund, there are 3 steps. The first step, fund manager has to move the underlying token into ETH. The next step, it will go update the token with the new target. Once this is done, fund manager has to move the ETH back to the underlying new target. How it is made. xWin is built in Solidity as a backend, React.js as a frontend. There are two main smart contracts. The first one, the core interface that interact with the frontend, and the second one, the fund to store the token balance. In the future, for the next step, we will launch the fund in the mainnet, enhance the autonomous algorithm, and finally, we want to integrate with other protocols. Thank you for watching. Now we are open up for the Q&A sessions.
I could start quickly if you want. So my understanding is that there's a fund manager. He has a list of assets, and I can deposit into that, and then they basically manage my wealth for me. You know, they rebalance it for whatever goal. Have you heard of Set Protocol before? So they have something along those lines, but I guess it's not for funds or wealth. It's more for copying someone's trades, and then you can actually get like a token that represents that basket of assets. Then you can trade those tokens as well. So if I want to, you know, join your asset, I can just they tokenize, you know, the basket of currencies. Then you can trade that around. Have you looked at that before? You know, how does it compare? What do you think?
Yes. Yeah. Before the idea came, yes, I know token set, and before when I started the idea and started to build this, I think token set they don't have any. I think now they come up with the version 2, where they have integrated with the farm farming, and then they have a lot of more features integrated. Before that, I just feel that token set was a bit. I mean, most of them is just a two tokens in each fund, and they basically just do two like swapping back and forth. So I thought that it would be good to have a bit more features like providing the alpha strategy or connect to other off-chain indicator, so that they can have a bit more autonomous. So basically, yes, I mean, I've seen that, and it seems like similar. That's true.
What do you think are the kind of initial strategies that you think people would be really drawn to or attracted to?
I think the strategy, I mean, it could be a very technical analysis trading where the protocol can connect to the off-chain indicators such as say RSI indicator, and then do the autonomous rebalance once a month or once a week. But the demo that we have that I built now is basically is a manual setting by the fund manager. So basically, if the fund manager launch a fund and they have some optimizations of the target and set up in the target in the protocol, and then all the rebalance and built-in features like such as depositing 50% of the balance into the Aave protocol or compound finance, it can be provided by the platform. And then also the redemptions and rebalance, it could be much more better for the autonomous, like how it could be rebalanced automatically, or any access active way can be traded automatically in the protocol.
What features would you like to add in the future, or where would you like to see xWin in the market compared to others that are in the space today?
I think to provide the tool for the fund manager to connect to the off-chain indicator is the one, so that the fund can be rebalanced automatically without any setting manually by the fund managers. That's one. And then the second one is any excess active weight in the fund can be used as a liquidity pool for the swapping purpose. Because anyway, you need to rebalance the fund, you need to sell some of the token in your portfolio. So it could be used as a liquidity pool for the swapping purpose. So that could be the next thing that we want to enhance this.
Cool, thank you.
Thank you.
Great. Any final comments? Otherwise, we will go into our break. Oh, go ahead, Patrick.
I was going to say, I think it's really cool.
Thank you.
Calvin.
Yeah.
Thank you.
Good job, Calvin. And with that, we will move into the 10-minute break. So do what you need to do, turn off your video and mic, and then we'll be back in 10 minutes. And see you in a bit. All right, that's 10 minutes, and it looks like we've got everybody back. So I'm going to play Andrew's video. Judges, are you all set, ready to go? Cool.
All set.
So this is the second half, and we actually only have 5 more projects, so we're well on our way. And I'll play the video.
Hello. I am presenting my project called the AirSwipe Wallet and Reader Project. This is my wallet and this is my reader. This is a hardware wallet and reader. The technical challenge of this design is to make it low cost, low power, and short proximity as a wallet and reader to allow complex transactions with Ethereum blockchains with a simple touch or non-touch AirSwipe within touching range of the reader. The goal was to design a low-power EEPROM-based transaction that doesn't require any simple token-based transactions like the kind you get from barcode scanners, credit card taps, or QR-based reader systems. My wallet and reader can support more processing using private EEPROM-based processor to do blockchain processing and with better encryption support. The system does not require a network interface that can allow complex transactions to take place at low power. The goal is to also allow money or cryptocurrency to be traded privately between wallets. Another technical challenge was to allow transactions with no power circuitry harnessed, that is by harnessing power from wirelessly from a reader. So like I said, this is my wallet, and I can perform a demonstration of that of the wallet transferring data directly to the reader here. You can see that by pressing the 2 buttons on my reader here or my wallet, I can transfer money to the reader at short or close proximity. And that is accomplished by using what I call resonant inductive coupling circuits. It's like a wireless transfer, but it's very short range, about 3 to 5 inches, roughly. And you can see that the payments, a payment and money can be collected with a complex transaction between the reader. Now I also can do a screen share here to demonstrate a program that is collecting this information. When I open the link, you can see that the wallet ID is immediately read, and I can continue to do transactions between the wallet here and the reader. And a balance is kept in the EEPROM of this wallet here. And the goal in the future is to develop a wallet here that has no battery power at all. And that will be an accomplishment. That concludes this demonstration. Thank you for watching.
Wow, very cool. What's your background, Andrew?
Well, I'm a hardware designer. I'm also a software designer, firmware designer. I do a lot of things. I create prototypes and I invent things, generally speaking. So, and I'm here in Waterloo, Ontario, Canada. Great places. I'm not sure if you can hear me.
Yep,
Okay.
sorry, I just turned off your video because it looks like you have a little bandwidth issue, but we can still hear you fine.
Okay. So that's my background. I also design software, and my goal intending this hackathon was to actually develop my hardware for the purpose of interfacing it with software applications, numerous ones that I saw that were available on your at your hackathon. I'm specifically interested. So most of the time I spent during the hackathon was to develop the hardware itself, but to eventually do an interface with any blockchain or cryptocurrency trading software mechanisms. So, and that's what I'm hoping to learn. And I learned a lot, and I'm hoping to continue to learn that and develop better interfaces.
Great. So this is just a mock-up right now. You're not sending actual transactions with each little press, right?
Oh yeah, actually it is. It's simulated. Unfortunately, the video was kind of slow. You saw blinking lights. What you could see is that between the wallet and the reader, you could see transactions taking place. It's similar to an NFC technology that I developed, but it's actually a two-way transaction that's taking place there. So between the wallet and the reader, that NFC transfer of data, which is pretty high speed, is actually doing a blockchain transaction and calculation, and also some encryption as well. So it's very private between the wallet and the reader, and hence it'll be private to the whatever software is driving the reader.
Can I ask two questions on that? Like the first one is it signing an Ethereum transaction? And I assume there that maybe, the reader isn't giving over blockchain information yet, but it's signing a real Ethereum transaction that could be confirmed on the Ethereum blockchain eventually. And my second question is to do with power. Is the reader powering the writer, the signer?
In the demo, sorry, I had the reader. No, the wallet is actually battery powered. Okay. I could only battery powered at the time. But the goal is to actually get to remove the battery from the wallet so that it's only powered from the reader. Cool. Those what I call resonant inductive couplers, in fact, can power the wallet circuit, and so you could actually power it with enough battery power or with enough power to run the blockchain transaction. The full calculation can be done on the processor. So. Yeah, to answer your question, that can be done. It's not done now, but that's one of the goals in the future. Yeah. And in fact, everything can be, the wallet could just be a simple PCB, smaller than a credit card, to be embedded into a handheld wallet. My goal is that you could take this wallet and go anywhere with it and do transactions by a simple swipe.
What are some of the
go ahead.
cases here that you'd be excited about, Andrew?
Pardon me, sorry?
What are some of the real world use cases you'd be excited about, Andrew?
Well, this could be used for a lot of factory applications. If you like readers in factories, if you want to read labels, you could do payments, pay your gas with a simple swipe technology like this. I think it's similar to a card tap or a QR code read, but it's not tokenized. You don't have to read the wallet ID. You can do a transaction in the actual wallet card itself. So that's my goal here. And so, I can think of a lot of applications for this, but I'm counting on this. I'm not sure people want to put money on their wallet card the way I have it, but that's something that could be done, and I can improve the privacy between the wallet and the reader.
Andrew, how How long did it take you to build out the initial prototype?
Well, I designed it just before the hackathon started. It was just a matter of getting the board designed and then putting it all together and then writing the firmware for it. So that took the extra 3 weeks. It's like a do-it-yourself wallet and reader. So, but the goal was to do this and to get an application through the hackathon. I was looking at Vega and Near Protocol as example software interfaces to use here. There could be more. So I was hoping to get.
I mean, if it can do like an ECDSA signature, then you could get the work of any wallet contract out of the box because they only need ECDSA signatures. They don't actually care anything to do with the blockchain.
That's right. Yeah, I think that can be done.
Mm-hmm.
All right. I hate to cut it off, but it is time for the Q&A. Thanks for presenting, Andrew.
Thank you. Thanks for having me. Have a good day.
And next is DeFi Blocks, Marius.
Hi, guys.
Hi.
Marius.
Hi, I'm Marius, and today I'm going to talk about DeFi Blocks, which is a nice little script that creates smart contract solidity code based on a Blockly block that I created for this hackathon. So to start with, I just randomly chose a strategy from the Yearn starter pack repository on GitHub. It's the di-compound basic strategy, and I had a look how to decompose it a bit and if there is some common logic that I could reuse. And I created basically a templated version of it. And so I could map my block variables to those template variables. And to demonstrate that, I have prepared here this block in the advanced playground from Google, which is a nice tool to visualize your blocks that you have, and also to play around with it a bit, to get a feeling how it works and what could be done. So as you see, you could just easily plug these parts of the block in and out, and it's a really nice experience, I think, to program a smart contract in that way. And on the right-hand side, you have an XML representation of this block, which we could then just copy. For now, I just copy it. Later, it would be nice to just have this like integrated. And then we can just go to our DeFi block definition and just paste it here. So now we have the representation of our block inside our code. And above we have the model for the block, which I created earlier already in the block factory from Google. So that's basically it. Here we have the templated version of the smart contract from Yearn, which looks kind of ugly, but yeah, it needs to look that way. And the template is red here. And then we read also the XML and we just loop over the values and we just regex replace all the values. And in the end, we get an generated smart contract, which has like all the values replaced. And yeah, you don't see any template variables in it anymore, and hopefully this compiles. And this would be like also like one of the next improvements that could be used to pipe this immediately into compiler or integrate it into IDE or something like that, because I think there's a lot of boilerplate code and a lot of stuff that yeah, could be improved for developers of smart contracts. And yeah, that's basically it. Thanks for listening. Yeah, so can you hear me? Hi.
Marius, what for these strategies that you would want to create, like what are the protocols that you've integrated down, and like what would you want to integrate if you kept working on this afterwards?
Basically, it's pretty yeah. You could choose whatever you'd like to. Basically, I'm looking for any smart contracts which have some good software design pattern already, because that makes it very easy for me to create a block for it. So for Jörn, it was quite nice because all the strategies look very similar. And I've seen this when I've looked into them. They have like maybe 70 to 80% boilerplate code. And I mean, the hard part has to be coded like differently. That's clear. But I don't know, maybe you could have an interface or something like that for strategies or for smart contracts that could like kind of lead the way into this kind of graphical way of no code smart contract development. Yeah, I don't know. Just curious what others will also come up to, because it was just quite kind of fun project.
Have you looked at the InstaDot contracts? They all have the exact same interface as a buy or sell for all of their strategies. That might be a good place to go.
Yeah, that's a great idea. I have to do that, definitely. Yeah, I mean, I'm pretty new to this thing, and I just wanted to learn something about smart contracts. And I thought, yeah, that's a really cool thing to do, because Blockly is also a very nice tool to have, I thought. And if you could, because I think that many people know what they want to do in terms of this DeFi thing, like optimizing stuff. They really know what to do, but they don't know how. So they have this problem, maybe, that they're not smart contract developers, but they know how to put it, maybe to Aave or to Compound, or you know, and yeah, this could be like combined, maybe. Yeah, good idea.
Yeah, I could see if you know, in a future iteration, I could actually see like putting together a strategy and then having like right underneath it a backtest show up of the strategy.
Oh yeah.
And like something like this is seeing a bunch of people put together like your strategies. I do think this is super practical and like very useful tool. So very nice.
Would be very cool to have like a test or something like that for it, like how does it perform, or yeah, but there you have the problem that you only have the mainnet where all the stuff is happening. So I was thinking also about maybe doing something else about that, but not in this project. But yeah, just coming into new ideas as I approach this. So
yeah,
it's quite nice actually.
No, I think this is really cool. I would encourage you to keep working on this because I think there's a lot of potential extensions of this that you can see even now.
Thanks a lot for the feedback.
Anything else from the judges? Otherwise, I think we could probably wrap there. All right. Thank you for presenting.
Thanks, guys.
Thank you.
Next up, we have ethFM.
Hello, everybody. This is Radio, an steganography project that works over ERC20. Our main goal was to hide bytes into ERC20 transactions. We did so by hiding this information in a specific transaction in a bunch of dummy transactions. We only can know which transaction has information if we have the key. This key is a set of different accounts with private and public keys that you can generate from our command line. What we achieved at the end of this project was to build 3 layers. The first one is the byte layer. We can hide bytes inside ERC20 transactions. The second one lets you not only post binary data, but you can also post IPFS hashes, some text, raw data, or call. This call will be execution for hidden contracts that we will see in advance. At the third layer, we have hidden contracts. These contracts are no more like that JavaScript code that can be replicated with different calls. We will see that in advance. And a Rebel command line tool that will let you interact with contracts, hidden contracts, just using your command line. So How does this work? Binary data is encoded as ERC20 transactions. The channel field, that is a field that is generated automatically inside the key, will serve as random seed for creating dummy transactions. And then the data can then be recovered using a TXID. So at the start, we have a buffer. This buffer we pass through the key. The key will generate an execution plan that will create a lot of transactions. Just few of these transactions will have real information. Then using the same key, we can recover that information and get the original buffer. Then we have the hidden contracts. Hidden contracts are no more than JavaScript code that is stored in IPFS. In this case, we use Pinata that let us store that information. But in advance, we can use them on other IPFS providers. These hidden contracts will store data into a Redis DB. So each time you call a function, it will replicate the state from the start to the end, letting you to write some logic inside these hidden contracts. So we can see an example of hidden contract here on the left. Then we have this hidden contract we want to publish. A hidden contract is no more than a JavaScript code that can be executed and called many times. So we create this simple contract, we deploy it with a simple command. It will start making transactions into the ERC20 tokens. You can see the complete log here. After that, you will be able to connect to that contract using this command. Then you will be able to add contacts, calling this function, and it will submit a transaction. All these tokens that are being sent will store the information. It will also control the supply, so it will ensure that everybody will have enough ETH and enough tokens. After all of that, we can then retrieve the information in this command, get contact by name. So this is a layer on top of the other information, but in the basis, what we achieved was storing information hidden inside ERC20 transactions and adding some simple functionality like hidden contract. Thank you.
I can try to summarize that, see if I understood what was happening. So you have a contract that's on IPFS, and that's considered hidden because it's on IPFS. And then if I want to send a transaction that interacts with that contract, I do this ERC20 transfer. And I want to hide my command, so I send like 10 ERC20s, and the command's in one of the transactions. And then
okay.
I assume that's encrypted because when you have then the other person who has to read it can decrypt it and run the contract.
Okay, so as I said, there are many different layers. The first one is everything that I will store in this hidden layer are stored as ERC20 transactions. We generate some dummy transactions and some real transactions. The real transactions will give me the information. So then we implemented this use case.
Or is it in plain text on Ethereum?
It is not encrypted by default because we want to implement the function that you can share the addresses, the transaction IDs, and you can generate a public key that can read the information but cannot modify. But they are hidden in the sense that the key has a field called channel. This channel will be served as a random seed, and it will generate dummy transactions. So it's not encrypted by itself, but you can only know which transactions are real by this specific channel that is inside the key.
Okay, so there could be like 100 transactions that all have different commands, but using this seed, I know that only 2 of the transactions are valid, and I can execute those commands.
In the moment you generate the key, you can define the parameter. How many accounts do you want to use? How many space between transactions at max?
Yeah, but that's the general idea, I guess. That's the hidden factor. There's 100 transactions, only 3 of them are valid.
Yeah, but these transactions are not meaning token transaction itself. The bytes inside these transactions are, okay, perfect.
Gotcha.
Okay, and the hidden contract itself is just an use case. I generate some system that lets you postcode an IPFS, track the hash here, and then push calls. You don't push the result of the calls. You don't say it. You just say, hey, I want to add a contact or add something, so I will post and add transactions. All the state is replicated when you execute a command.
Yeah, so I guess in a way, I don't really see the point of the ERC20 contracts. I mean, it sounds like the idea here is that there's a counterparty who I want to get a message across to, but there's an eavesdropper on the communication line, and I want them to know which transaction they should read because this has important information. And you could do that using any contract or even just payload.
No. No. The point is to hide information. This is what steganography is about. You can hide information in many things, in image, videos, etc. The point is the information is not readable. So you want to make something hidden. So the technique we built in this software lets you hide arbitrary information inside ERC20 transactions. So that's the point, hiding information.
So as you were building this out, what use cases do you have in mind that you'd like to see in the wild?
Okay, so we call this project ethFM, but also we call it radio because we make the symbol with radio stations. So we made a simple use case, for example, this agenda contact. You want to have some private agenda with private contacts and you don't want anyone, minors or anyone to read your contacts, right? So you can have it. But you can also do more complex stuff. For example, you want to make a post of trading cards, for example, for gaming, trading cards. So you can post your trading cards daily, and give the public key, the public transactions of the information that is needed. So anybody can read this information, anybody that you give the key can read this information, but any other cannot read the information. But as you give the public key and not the private key, they can't add new cards, they can just read. And I want to implement in the future a functionality that lets you fork another contract and have a parallel private contract that is listening to another contract. So you can have, for example, my own cards and private, and there are another original cards that are already private, but they share with me. It's basically hiding stuff, hiding data, hiding information, and sharing that information with others.
Thank you.
Very cool.
All right. Thank you guys for presenting. It sounds like it was a really technical project. I might have to watch that video again and dig into the concept a little bit more after this.
Yes, one of the problems I had was to explain this in very precise time. So any question you have, you can text me.
Yeah, I think next time make sure you highlight the I can't pronounce it, stenography part, because that didn't come across in the presentation to me, and now it makes a bit more sense of what you're trying to do.
Okay, so thank you.
I missed it, I don't know, I didn't see it.
Great. Thank you, team.
Thank you.
Thank you.
All right, next up is the Compound PID interest rate controller. It's quite a team name, but I'll be playing the video for this team.
Thank you.
Hi, my name is Alexis, and for ETHOnline, I decided to experiment with using a different kind of interest rate model for DeFi applications. In today's world, most interest rate models are based on strictly the utilization rate. So as the amount of money borrowed from a pool increases from 0% to 100%, the interest rate increases, and sometimes there's a discontinuity in the model, which causes it to increase more rapidly after a certain point. The purpose of this discontinuity is to to speed up the resolution of market state where the borrowing amount of a pool is saturated, and people are not able to withdraw their money. By charging a lot of money to borrowers, people are incentivized to repay borrowers and supply more, which resolves the situation. The problem with such models is that they're pretty rigid. They tend to operate at a low utilization rate, and that they require a lot of interference from governance to maintain correct interest rate levels. So my experiment was to use a PID controller, which is basically a concept from control theory, which uses feedback from a desired state and a target state to influence the variables that are controlling the system. So in my case, I decided I would target a utilization rate in a compound pool of 80%. And I basically wrote an agent-based simulation to show that a PID controller can accomplish this task. In my simulation, I have two classes of traders, commercial traders and noise traders. Commercial traders have an opinion of what a fair market interest rate should be and trade in accordance to that. They also have their own internal volatility that affects their views over time. Noise traders simply place borrows and withdrawals and repays and supplies randomly in random amounts over time. So this adds more volatility to the market. So I plotted the how the different models evolved over time in both scenarios. So this is the example of the jump interest rate model used for DAI and compound today. The most interesting thing to look at here is the utilization rate. As you can see, like there are reasonable periods of time where the utilization rate falls like below the target for a long period of time. In addition, the spread between the borrow and supply interest rates is quite large in many of these cases. Now let's move on to the PID controller. In the PID controller, you can see that the spread is quite constant at 0.8 of the pool's utilization. So as mentioned before, the benefits of this model is that it's less overhead from governance, but more importantly, because the spread is so much smaller, if you have traders that have an opinion on what a fair market interest rate should be, the chance that the offered interest rate is close to the interest rate they'd be willing to take is much higher. For example, on Uniswap markets on compound today, you can see that the spread is quite large. So you supply for about 4% and you borrow for about 13%. And so if you have an opinion that the true market rate should be anywhere between 4 and 13%, you're not going to interact with that market. So with a PID controller, you can decrease the spread a lot. In the future, I would like to make the model a lot more robust, fix edge cases, write solidity for the interest rate model code, and then write a bunch of tests to basically show that this is robust in a wide variety of scenarios. Thank you for listening.
Alexa,
Oh,
sorry.
No, go ahead, Imran.
No, go ahead, Arjun.
No, I was just going to say thank you for sharing. This is really cool. I think that one of the, just watching compound governance over time, especially over the last 6 months, it does seem like there's a lot more conversation about moving to some form of like autonomously generated and updated interest rate model. I think there are a couple of different teams that participate in governance that are working on this. And so I think overall, like this is really, really cool to see more experimentation here.
Cool, thank you.
Imran, go ahead.
Yep, thank you. Agreed with Arjun. I do think that, making sure that there's more stabilization between both borrow and ask are going to be important moving forward. How are you thinking about implementing this out in the public? Like, I'm curious to hear what you're thinking around that.
Yeah, so I think my approach to this hackathon project was really develop a proof of concept. And that was basically the concept of the agent-based model, was to basically give me a framework of how I can evaluate two things. One is this an interest rate model that is robust to a wide variety of market scenarios? Because as we know, DeFi is very volatile, and we need to basically not have like cases where we fail catastrophically. So that's the one thing. And then the other thing is basically like fine-tuning the parameters of the model itself. So a PAD controller has like 3 parameters that you can tune, which determines how quickly and how aggressively it responds to like supply and demand imbalances. So basically, by developing this project, it gave me a framework to jump off of. In the future, I'm going to basically like test in a way more like a much larger variety of simulated market scenarios. And then if I can basically show that it's robust in all these scenarios, then I'd be comfortable putting up a Solidity contract to upgrade probably the interest rate model for one of the stable coins with a lot of tests, obviously. And hopefully that'll give like compound governance voters the confidence that this is something that can be implemented on the live network. So yeah.
I have a very simple question for a finance newbie like myself. So the way you so the idea here is that in Compound, there's some levers that need to be pulled, and that's done by governance votes. And by using your work, you can automate some of those levers away. What levers are left over then? I mean, what levers are being replaced and what levers are going to be left over? What still needs to be voted on? You mentioned how aggressive the algorithm's going to be. Is there anything else?
Yeah, so there's a lot more other levers in compound governance that need to be adjusted by governance. So for example, like collateral ratios, reserve ratios, which is how like quickly the compound reserve pool builds up, as well as obviously the whitelisting and like the listing of new assets. So there's still a lot of other things that governance needs to do, but the important thing is that those are probably levers that need to be modified like on a very occasional basis. And there's also probably like more of a like it's easier to tell like how the decisions to be made. So for example, like you probably want a lower collateral ratio for a more volatile asset because it's more likely that like price volatility will result in people getting liquidated. And you want to make sure that you have enough of a cushion to avoid losses on the supply side of the pool. But for something like interest rates, you know, like there's things like yield farming that like distort markets for stable coins. Last year, there's like the Ethereum boom, and we saw like DAI stability fees go up to 22%. So that changes very rapidly. But there's also like there also seems to be promise that like this can also be largely handled by automated systems. So basically, it's to like reduce the overhead on governance and just make that a lot easier.
Awesome, thank you for that.
Any final comments?
Oh, this gets us closer to having one step closer to having something like the TRFM for Compound. So I would love to see more work on this kind of in the wild as well.
Cool.
Yeah.
All right, we're going to move on to the final project of the day, which is Liquid L2. Yes, before we do that, I want to thank the judges again for sharing their time and their knowledge. It's always good to have an outside perspective who hasn't been building for the entire month jump into something and try to grasp what it is. So thanks again for that, guys. I will share the final video here.
And this is my hack for ETHOnline, Liquid L2. So
let's go back.
Hi, I'm Tom French, and this is my hack for ETHOnline, Liquid L2. So the problem I'm trying to tackle is that layer 2 solutions are becoming essential for Ethereum, but the withdrawal times can often be quite long. For Matic, this is about 30 minutes, but we're getting optimistic rollups coming along, which are going to take a full week to confirm withdrawals. Personally, having my funds locked up for a week is a huge issue because there's a real opportunity cost associated with it. So we want to avoid this as much as possible. So Liquid L2 allows delegated withdrawals, which allows users to have immediate access to their funds. So the way this works is that lenders can use Aave's credit delegation vaults to lend to users. And these loans are backed by their pending withdrawals. So the step-by-step process is that the user kind of creates a vault on a layer 2 solution and then starts a withdrawal from within that vault. And then the lenders can see this and delegate credit to the corresponding vault on mainnet. The user then has full access to those funds and can go do whatever they want with them. And then once the withdrawal is complete and has been confirmed, then the vault can automatically repay that loan and the lenders get their money back. So here's a quick interface to interact with Liquid L2. So let's say I'm a user of a layer 2 solution and I want to withdraw $10 from Matic. So here I am signing a kind of confirmation to allow Liquid L2 to use my funds, and then I'm going to sign a transaction to start a withdrawal. So that's going to happen in the background and confirm relatively quickly because we're on L2. I'm just going to quickly grab that transaction hash, and then from now on we're going to be using the girly testnet, so I'm just going to swap. So I'm going to quickly show what withdrawal looks like on the layer 2 solution. So you can see that I transfer these funds from my address to a vault, and then the vault will burn those funds starting withdrawal. And that's what gives Liquid L2 the security. So now that we're looking at it from the side of from mainnet, you can see that I don't have any USDC on mainnet, but I have 2 withdrawals going, which come for a total of $20. And I've been given a credit limit of $10, and I've used none of that so far. So let's say I borrow $10 against this credit limit. So I can click that, and I'm gonna kind of atomically create a vault on mainnet, and then withdraw those funds. So that's going to confirm. And while we're waiting for that to go through, I'm going to talk about how it comes to repaying the loan. So I have this withdrawal that I just started. That can't be what's the word? It can't be repaid just yet. But I have this withdrawal that I created earlier, so I can actually use that to repay some of my debt back. So you can see here that I've used $10 of my credit limit to increase my mainnet balance by $10. So at this point, I can go convert this into Ether. I can do whatever I want with it, and then at some point in the future, like I can repay my loan. So I'm just going to quickly repay using a withdrawal that I created earlier, and this is going to be generating a proof in the background, and then I'm going to be able to send that off to the withdrawal vault, which will repay my debt. And this withdrawal process can be done by anybody because the vault is the one that's actually reclaiming funds from the layer 2 solution. So both the lender and borrower can repay their loan, which is how the lender will know that they will get repaid. So that repayment transaction has gone through, and you can see that my credit limit has dropped down to 0, and my borrowed amount has dropped by $10 as well. And thank you very much.
Wonderful. This is like the white whale of projects everybody's talking about, that we're going to need these things. And now somebody's gone and built it. So this is great.
I have 2 questions. I guess the first one is to do with so basically I'm on the L2 solution. I send my coins to the vault. Does a lender need to approve that to me, or is that automated in the contract? I mean, as a lender, do I put my money in a pool that says this is good for this L2? Anytime someone needs money from this L2, take it from here. Or is there some manual process there where the user has to double check the vault before they lend the funds out?
Yeah. So the way that it works in a minute is that the user doesn't need a prior approval from a lender to withdraw. But at the minute, there is like a central single lender that approves all kind of loans. So what happens is that person will kind of see that this withdrawal has started on layer 2, and then send another transaction on mainnet to give a credit limit.
Okay, they trigger it.
If they don't actually, if that person disappears and goes away and doesn't sign any withdrawals, then it's like a normal kind of layer 2 withdrawal. The person has to wait for the confirmation time, and then they repay a $0 debt.
Yeah. So my next question is more like safety for the user. Let's say I submit a request for a loan, the lender doesn't give me the money, but now my coins are in the vault. Do I get my money back, or does this go to the vault?
Yeah. So basically,
each loan kind of keeps a tally of how much money it's drawn against its credit limit. And when I submit a withdrawal proof, what the vault does is it claims all the money. It kind of checks how much have I borrowed, pays that back, and then it pays everything left over back to the owner of the wallet. So if I have a partial loan, then I just pay that off and I get everything else.
Cool. Really exciting.
Thanks.
Just a high-level question. How are you thinking about extracting fees? Would this just be based on per transactions, or like how are you thinking about it?
So at the minute, it doesn't take any fees, but like that's something. I haven't thought too much about it because it's not kind of the core aspect of this, but like you could have a flat fee that just kind of gets added onto each withdrawal just to kind of like pay for gas. You could kind of do a percentage-based thing. The other thing that I'm sort of considering is this doesn't kind of match for Matic, but like if we then applied this to something like Optimism, where there's kind of this long challenge period, it might be worth kind of doing a time-based thing of if you're 5 days into this challenge period, drawing a loan at that point is much cheaper because it's a lot less risky, because presumably it would have already been challenged by then if it was fraudulent, and there's various ways of going about it, but I'd need to kind of think about how to. I think the main kind of next goal is removing that central lender, and then fees would kind of come as a consequence of that.
Yeah, that was going to be my feedback as well. It would be really cool to see this without any of the external like lending dependencies.
Yeah, that's kind of quite difficult, like because I was building a Matic, like nothing touches mainnet until it's available to be claimed. So it's very hard to have any sort of verification on that. So we need that kind of two-party thing.
All right, any final comments?
Oh, this is really cool, Tom. This is another project that it would be really cool to see kind of continue development on. I think this is going to be really, as a lot of these L2s come to market, I think this infrastructure like this is going to be really important.
Thanks.
Yeah, the assumption is that these things are going to exist at some point, and it's good to see that people are actually, exploring how they will actually work and the whole design space for it.
Yeah, I think another point is I mean, just as a comment, you talk about optimistic rollups, but this would also be valuable for the ZK rollups because, if I'm running a rollup of a ZK proof, I don't want to post that unless, as the operator, I don't want to post that unless I collect fees that cover the cost. So you could be waiting a few hours until that block hits the, Ethereum. And actually, if I just do a loan on ZK rollup, then I could get access to the ETH immediately. And then the lender's taking on the risk of waiting a few hours. So I think it's applicable for both. It's just quick withdrawals. Loan being quick withdrawals.
Cool. All right. I think that's it for today. We are through all the projects, which is great. I want to thank again Patrick, Imran, and Arjun for sharing their time and knowledge with the hackers, and the hackers for showing up and presenting. Congratulations on making it through the entire month of building. It's been really awesome to see behind the scenes as an ETHGlobal team member, watching everybody jumping into things they haven't built previously or learning new sponsors to integrate. It's always a good experience every time watching it from this side. So thank you everybody for coming. The next thing to keep your eye out for is we will be selecting the 10 finalists. Once all of judging is complete, we have 2 more sessions tomorrow, I believe. So once all 4 sessions are complete from judging, we'll be reaching out to the top 10 finalists to present on Friday. So the finale for the entire hackathon is Friday, the 30th, and that starts off our final summit. So we'll have presentations, sponsor prizes announced, and that starts at 12 p.m. Eastern on Friday. And you should get a calendar invite today or tomorrow for that. So make sure you just watch your email if you're a hacker, and we'll be reaching out to those teams to present that day. And then after the hackathon presentations are over, we have another, this is our final summit for October. We've been running weekly Friday summits. Maybe you've caught some of them throughout the entire month. And we've got a bunch of great sessions to close out the month, including a fireside chat with Tyler Cowan and Vitalik. So definitely don't miss that later in the evening on Friday. So we'll sign off here. Thanks everybody for coming, and good luck.
Thanks everyone.
Awesome work.
Thank you. Bye.